All right, we should be recording now, guys. So no more questions here for us before we get started here. No more questions, guys. The recording is going, so this will be recorded from here on out. The topic of tonight is going to be these markets and what we think moving forwards. It's September now, September 2nd. Labor Day is over. We had our long weekend. The market still had very light volume today. Uh, can be expected. Volume will be picking up here soon, though. And with increase in volume, there's a chance we're going to see a little bit of selling come into the markets. We will see, though. We don't know until it comes, but every time that we do see an increase in volume, we do get a pullback in the overall market. So definitely something for us to keep in our minds. Also, tonight we have 3 open positions still. That's great because we've been having this is what is this, guys? Week 8 of this options program, these options classes. Things are just going great. Feedback is awesome, so appreciate that from everybody. Our trades have been phenomenal, so we've had very, very good luck and success with our positions, and even the ones that we still have on. The problem with the ones that when we first started was they hit targets way too fast. That's not a bad thing, but yet it's not good for learning either because we kind of want to pick up on some of this stuff and learn. So we got 3 open positions now. We're letting them work. Just going through the natural motions of swing trading these options. So we're going to go over all them positions. We have one that's neutral, one that we need to give it a little kick in the butt to get it going, and another one that's just working out just fine. So we will cover all 3 of them positions. We'll go over the overall markets and talk about what's been going on today, and then we'll dive into some possible trading opportunities and maybe have you guys pick a position. So I can tell you right now, the position's either going to be trading the indexes or trading oil. So we're gonna pick one or the other, and we're gonna pick the right prices, and we're just gonna go with it. But so it should be a pretty good class. We haven't traded them type of instruments yet, so it should be a new experience. And if the opportunity presents itself next week, we're going to try to trade some bonds. But I looked at some of them today, and I'm just not a fan right now. So I had to sit out one more week here and give it a little more time. Maybe next week we'll get an opportunity to maybe put on a bond position, and we'll go from there. So, anywho, any other questions before we get started? Any other questions? I will want some feedback, guys, on some stuff, but that's for a few minutes down the road here. But are there any questions before we get going? No, sir. Okay. No, sir. Nope. Nope. All right. Let's rock and roll, he said. Okay. Sounds good to me. All right. Let's talk about the overall spiders and what's going on. Last week, we talked a lot about the measured move. We even shrunk this chart down and we measured all these moves from these lows to these highs, from these lows to these highs, and we realized that these moves are about 10 points. This one over here to here, it's about I don't even know. We came up with 10 points. This is about 12 points. This one here, 8 that's about 11 points. This one here from the 90s to the 201s. There you go. That's 11 points. So we've had a pretty good measured move here in the spiders, the overall markets. These anchor legs up before they take a pause. It's about pretty standard for where the market usually takes a break, whether it chops sideways or actually pulls back. Nonetheless, it does take a little break. So with option trading, we can take advantage of that several different ways. So depending on what we think, and we're going to take a poll here in a little bit, it's going to determine our trade today. Like I said, I got a position here that we're going to talk about that kind of represents the move here in the spiders. So if we're bullish on the spiders, we bearish on the spiders, we neutral on the spiders. And then also we're going to go over oil, and we're going to discuss whether we're bullish, neutral, or bearish on oil. And if we have an overwhelming group kind of decision on either one of them, we got a couple decisions to choose from. So that's what we're going over right now. So start thinking right now for the rest of the class. Are we kind of bullish on the indexes? Now, this is over the next 2 weeks. 2 weeks to 3 weeks. Are we looking to be bullish on the indexes? Are we looking to be bearish on the indexes? Are we neutral the indexes? And then the same thing with oil. The reason we brought oil into the equation because oil had a very interesting day. Oil had a very interesting day. So let's just go ahead and let's look at oil before we move on. Go ahead and look at some oil before we move on. Very, very, very interesting day in oil, as you can see. See this nice little pop down? But more importantly than that pop down, that big pop that you see to the downside, look at what happened down here. This is very important when trading options because anytime you can get a volume spike, now it may not make the market go forever, but it'll at least be strong enough to hold the market in that direction. Let's go back and look at the most recent spikes. Volume spike. Look at what the market did. At least it held down after that run. The most recent volume spike, down. At least it went down a little bit. That's enough to get us our profits. Volume spikes to the upside. What happened? Volume spike to the upside. What happened? So look at these volume spikes. They will tell you a significant amount. Here's a very interesting one. Volume spike, big up day. Now, did the market push a bunch higher? No, but it did maintain higher for a substantial amount of time. This is all we need to profit with our strategies. This is all we need to profit from our strategies. So let's keep an eye on these volume spikes. They will tell you quite a bit, guys. Look at these volume spikes and what they tell you. So something very interesting in oil, like I told you, like I asked for on the SPY or just the indexes in general. Are you going to be bullish, neutral, or bearish? So that is something to think about over the next probably 15 minutes while we discuss our current positions. And then we're going to come back and I'm going to present some opportunities and say, hey, are you guys bullish, neutral, or bearish on the stock index futures, the overall indexes in general, and what about oil? Are you positive, weak? What are you guys on oil? Another thing to be interested in. Also, something to keep on your mind is we already have an oil and gas ETF trade. So if you don't want to get too leveraged in one instrument, that may want to push you towards the indexes as well. But it's completely up to you. Oil looks very, very bearish today. We're trying to determine whether the indexes are exhausted to the upside and whether or not we can get the right price on our option plays when it comes to making them trades. So with that being said, I'm kind of telling you that oil we're not gonna receive as much credit as what we will if we decide to trade like a retail sector. Okay? So in the ETFs. So something to keep on your mind. Are we bullish, bearish, or neutral? These two different instruments, and we'll start talking about them here in just a little bit after we go over some of our own or some of our positions which we already have on. So, okay. And if you guys have anything, you can chime in at any time. Feel free. But we're going to go ahead and we're going to move on. And we're going to start talking about some of the positions we already have on and see what we're going to do there, which it's going to be more of an update. There's not going to be anything that we do. I'm going to leave all these positions on, but I still want to go over them and talk about what we need to do and where we're looking at, just in case anybody may have any questions or somebody may be confused on what we're looking for the instrument to actually do. Okay. Let's start with Cisco. I'm not a trader like that. I don't know if they're flaky is the right word, Bill, but I don't trade them. Maybe it's something I need to look into a little more, but I never do trade them, so no, I'm not sure. Okay, Cisco. What do we want to happen here in Cisco? Do I don't care, man. Do you guys prefer me using profit charts, or does it not matter? It does not matter to me. Whichever you guys want to do, I will do. So, anyways, so what are we doing here? Cisco, we have a position where we sold the 24s and we bought the 23 calls. So, and we paid 93 cents, I do believe. Yes, 93 cents. So, it doesn't matter. Okay, Tom. We paid 93 cents for these. So basically, we got to break even somewhere around here, or this is what the price that we have. So we need this thing. Remember, this is a debit. This is a debit. So we need to see this thing get a nice pop so we can get out. There's still 17 days. Here's the interesting point. There's 17 days left in this trade before expiration. We need to see this thing get a pop. We're not losing on it. We're pretty well flat, just kind of neutral. And there's no craziness here going on. Actually, I need to check on it. Let me just go ahead and go over to Cisco real fast here, guys. Over here real fast. Let's just go ahead and look up our positions as we are. Let's just go ahead and look these positions up as we're here. So we did what did we do? We sold the 24. We're going to buy a vertical. There we go. 93 cents. We can do it right now at the mid, the same trade we did 2 weeks ago. Same trade. The same trade we did, 93 cents. We paid 93 cents. So that tells you something. We need this thing to get a kick in the butt and start to move to the upside because this is a debit and we're going to get decay. Anything inside 10 days, I'm just going to get rid of it. This thing has not moved enough. It's not. If it starts to fall, I'm going to get rid of it. Anything below 24, or if we come in here next week and we still have this position, I'm going to get rid of it, guys. I kind of stick to that 10-day rule. 7 to 10 days is what I say, but 10 days out, I will start to dump any debit spreads. I want to get rid of them. Time decays is about to eat me up here. Start to get into our pockets a little bit. So let's go back to the chart here. If this thing doesn't start to get a pop, if it gets a nice pop here, we're going to look to take some profits. We're going to look to take some profits, even if it's something like 30 cents, 40 cents, that would be great. If we can get a pop up and retest these highs up here or something like that, let's look and see what the prices are and see what we can get out of it. But that would be a great indication for us to go ahead and get out. If we can retest the next level of resistance, let's go ahead and take our profits and move on. This has been a very long position for what we originally were looking at. So not getting any type of a hurry, but we are looking to see this thing get a quick pop. If it rolls over and just maintains here, I don't care. If it gets down to 10 days, which is what we're going to have next Tuesday in class, you'll see me get out of this. Probably will be for a small loss, just depends on where it's trading at. But I'm probably not going to let this thing go past that 10-day point because it'll start to really, really suck up on that premium, and it'll be very difficult for us to make any money on it past that position or past that time. So debit spreads, 7 to 10 days is about my threshold because anything after that, it's going to start to add up because time decay. Okay, so really nothing to do here in Cisco. I'm being calm, being patient. This thing is actually working out fine. It's just not working out fast enough. So we're doing just fine, but what we'd like to see is a quick test here of this resistance. Get somewhere up here around these 25.50s, 25.30s, somewhere up in that range. Get us a profit so we can get out and be happy with it. But other than that, there's really no reason for us to get out of this position. As I said, the price of it is the exact same that we paid 2 weeks ago right here. So really no change in it. We've went kind of sideways to a little bit bullish, but we just need that 1 or 2 day pop. We need that 1 or 2 day pop in this Cisco position, and we will be happy and we'll just move on. But coming here next Saturday and we're still chopping sideways, probably going to relieve ourselves this position and move on. So XOP, we got the oil and gas ETF. We have a very interesting position on in this. It is an iron condor. It's probably the first time several of you have ever done an iron condor. But nonetheless, hopefully you're learning. And hopefully this is really helping you with your options and your patience and all that, because this has been playing out just wonderfully. We bought it. Well, whatever. We actually received a credit, but we got into this position 2 weeks ago. We took an iron condor. The price was right in here. What we did was we saw some really defined support and some really defined resistance. This wasn't here yet, but this was resistance. And we said, well, this is interesting. Our oil has a sideways bias too. Even though it's bearish, our oil is very bearish, it still has a lot of support and resistance to bounce around. And if you remember, when we got into this, oil was way extended. So you remember that retracement we just had in oil? That retracement back to that 21 EMA and oil we just now had? Looky here, we got a nice pop up as oil retraced up. Got a pop up to resistance. Now oil is at resistance and had a big old down day today. What happened here? A big down day. You know why we love that? Because this is where we want this thing to trade. We want it to come up to resistance, roll over, come to support, get a bounce. That's the idea of this position. We want this thing to sit stuck right in the middle. The longer we can get this thing to stay in the middle here, the more money we're going to be able to collect on this. The cheaper we're going to get to buy this back. We originally collected 60 cents on this. I'm not sure. Can anybody tell me what this thing is trading at right now? I really don't even know, guys. Let's see. Buy the 81 calls. So let's do an iron condor. We buy the 81s, sell the 79s. I'll just put it together real fast for us, guys. And then we buy the 70s, if I remember right, and the 72s. Sell the 72s. I think I'm right. Pretty sure that's the position we have on. And you see here, it's up at one of the highs, and it's going to receive 53 cents. And it's going to receive 50 cents. Okay? So we've already gained a little bit, but the reason this number hasn't changed significantly, is because we're at one of the extremes. When this thing comes back and gets closer to this midpoint, this center point, that price is going to drop substantially. And we're going to be able to buy it back for a significantly cheaper price than if it were at one of the extremes. Unless we were right at expiration. We still got 17 days ago. So we just want this thing to stay inside here for another week or so. And depending on where it's at, we'll either take our profits and be happy with them, or we'll let this thing play out. If we can let this play out all the way down to the final couple days, that would be great. If this thing gets a huge sell-off really quickly, I may want to just take my profits. That decision can only come down the road whenever we see what type of market activity we get. If we decide to chop a little bit more, it's perfect. That was the original plan. Same thing we initially came up with, and we're still in good shape. Okay? So no change here either. XOP, we want to see it stay between them 79 halves and between them 70, like 71 halves. So as long as it stays in that range, we're in good shape, guys. So good trade there as well. And then finally, last week, we put on our first volatility trade. Our first volatility trade, why did we do that? Because we thought that there was some exhaustion coming in the S&P and the indexes. We thought that the S&P and the indexes were ready to take a little break, and they were getting a little extended, and we were looking for them to roll over. If they roll over, we'll get this volatility to roll up. This instrument follows the VIX futures. So we're coming into a little double bottom here as the S&P is starting to exhaust itself and roll sideways. Hopefully start to pull back. That should get a nice little pop here in this VIX. And all we're looking is for another 2 or 3 day pop. I mean, a nice big pop, and we'll be able to take some profit. Kind of like that Cisco, though. Kind of working against each other, but that's fine. Even if you got two positions working against each other, if you got the right prices and you got everything in line, you should be net positive. So those are our trades on, guys. Are there any questions? I wish I had more to say about them, but as of this point, everything is working out just fine, and we're doing well. So there's nothing for me to change. I hope that's okay with you guys, because I really have nothing to change in them. This is kind of nice. We can just sit and talk about our positions, be very happy with them, and just wait and move forward. So my profit target for the debit spread, John, I want to see us hit resistance. That is what I want us to do. I want to see us hit resistance. If we can hit resistance, I would be good. I don't know what the price of it will be at that point. I'm not going to put out a profit target or a percentage right now. I want to see the option go ahead or the technical go ahead and hit its resistance. That's what I want to see. If it pushes up to its resistance and we're able to, I don't know, let's say we can, make 30% on it, 40% on it in 2 days. If it pops up, I'll go ahead and take it. If it's one of the things that's grinding to the upside, I'll probably take a little bit of a break and not get quite as aggressive. So, that makes sense? Okay. Alrighty. Alright, looking at these other instruments, guys, what are we thinking about the spiders? Are we bullish? We bearish? What are we on these spiders, guys? What are you guys on the whole overall market? Are we bullish, bearish? What are we, guys? Just to hear from the group a little bit. What are you guys thinking? Participation. Thank you very much, Tim. All right, guys, there we go. Now we're starting to get some people. Thank you for your feedback, guys. I'm getting everything. I'm getting everything all across the board as of right now. It is a straight 50-50 tie. One is slightly bearish, one's slightly bullish, neutral to bullish, bearish, bullish, bearish, slightly bearish, neutral to bullish. All right. What are we about oil? What are we about oil? What about that, guys? USO, yes. What are we about the USO? Let's go ahead and let's look at USO. We bullish? We bearish? What are we on oil? What are we on oil, guys? All right. I'm just trying to get the group overwhelmingly to make a decision. All right. I have one bullish and probably 8 bearish. Got one that says hitting support. It should bounce. Why should it bounce here? I'm not saying it can. I'm just being a little pest. Why should it bounce here? It didn't bounce here. Didn't bounce here. I'm just picking at some of you guys' brains. All right. So, well, I will tell you, it ended up being maybe one way bullish on the S&P. The S&P, there's one more bullish than bearish. That's on the SPY, and on USO, it was probably 90% bearish. It took 5 days to rally and 1 day to take all that back. Good point. Good point. Look at USO when it drops. It's been rallying. It rallied pretty quick here. Drops really slowly. Rallies really quick. Drops really slowly. Rallies really quick. Drops really quick. 5, 6 days. Drops really quick. Slow rally. Drops really quick. Slow rally. Drops really quick. I would say we're in a bearish move. I'm just looking at the technicals, looking at the strength of it. Look how fast it sold off. Slow rally, fast sell off. Nothing anymore. Quick pop, slow sell off, quick pop, quick sell off. So just look at the overall market, what it really likes to do. I would lean towards the bearish side with the 90% of us. I understand that the histogram down here is not selling off anymore, but I don't look at the histogram. The real MACD is these lines, and they're still bearish. These lines are still bearish. We're starting to roll over again. I think we got an overwhelming decision here. The only reason I wanted to throw the SPY out there with you guys is because we already have an oil position on. I know USO was an awesome play for me today. I love it. But we already have an oil trade on. This we're not going to be able to collect as much on. We're probably going to do something around the 35s to 36s, and we're not going to be able to collect as much. Yes, Bob, that's what we're going to look at. And the only other thing I was going to show you guys, the retail sector, which not always, but sometimes will have a little bit of a kick here, a little bit of a leading here. I was going to offer up the XRT simply because we can do about $1 widespread and collect close to upper 30s. If we do $1 widespread, we can collect probably 36 to 40 cents. And if we decided to do a $2 wide, and this is 70 plus percentile, we're getting up around 66 cents. That's a pretty large number. That's a pretty large number, guys. But you would have to be bearish on the market, and we weren't that. No one decided that. It was a very, very 50-50 draw here with the market. Seasonally bullish. There you go, John. John's talking about what time of year it is. I don't think we're quite to that seasonal spot yet, but maybe a little bit. Maybe a little bit seasonal. Let's actually go back and look. That's a good point. We haven't really talked about seasons yet in here. Let's go ahead and do that. Let me go back here. Let's go back to September. Look at September last year. Had a little pop up in September, then a little pullback. Let's go back previous year. September, kind of neutral. The previous year in September, very, very bullish. Previous year in September, very bullish. So there you go. Not a good one to short. John, awesome point. John finally brought up something we haven't talked about here. I know, granted, we've only been here 8 weeks, but it's seasonally a bullish month for this instrument. So that might be something for us to take into effect, but we were going to be able to collect a very, very high premium for this. Let's go over to USO and let's see what we can collect if we decide to do that. We would want to be above them. 36 is a resistance, but I don't think we can bring in enough money if we do 36s, guys. We're going to have to do something like a 35. And let's sell a vertical, and let's look to, I think we may have to do 35, 36, we get 27 cents. 35, 37, 34 cents. That's awful. That is awful. Let's go to 35 half. And 36 half, 15 cents. Guys, this may not be tradable for us. This may not be tradable. Let's go to ConocoPhillips. Maybe ConocoPhillips will provide us an opportunity. You guys still want to be bullish on or bearish on oil? Let's look at ConocoPhillips here. Let's see if we can get a ConocoPhillips position on. What's our resistance here? About 82 on Conoco. Let's go to the 82s. Yeah, right? All right, the 80-82s. Let's look at this chart. Where's the 80s? 80, 82. So at the money. Yeah, we gotta look out a little further. Sorry about that. We gotta look out a little bit further. 80-82s. I'm not gonna do that, guys. That's at the money. I'm gonna go back to USL. 45 cents. That's not bad. So we could do the 82 half by 85 on Conoco, and that could meet our parameters. If you guys like that. Or let's go back to USO. What's our resistance on 36? So let's I'm still not a big fan, guys. You guys want to collect 26 cents, or would you rather collect a little bit more on Conoco? What are you guys thinking? I think it's overwhelmingly that oil is going to be the winner here. I'm still getting feedback on it, so. Yeah. All right. Whatever you want, bud. I don't care. USO. I got a few people writing USO. So let's go back to USO. It's looking like that's what people want to trade. Let's look at the numbers and let's put this sucker together. We want to be below these supports. Here's this. It's basically 35. We want to go ahead and see this thing trade below 35. So what's 35 trading at here? 35 is basically at the money here, about 55%. But if we can collect some, let's get over. Let's do the 35 half. Do the 35 half by 36 half. Let's see what we can collect. 26 cents on that. That leaves us about 35.75. Now we're pushing towards that 70%. 70% probability. What do you guys think about that? What are you guys thinking about that? You guys okay with that? You okay with these numbers? It's a little bit smaller profit. Little bit smaller profit. Man, that's just frustrating. That's up to you. That's up to the group. Do you guys want to take on the risk of going to the 35s? It would be 55 cents here. That would make it 34% profitability. 36% profitability. Do you guys want 66 or would you rather have 70? Because if we sell the 35s, that means 35.55. This is actually a good one here. 35.55 is going to be about 66 probability of success. You guys want that for the extra money? 55 cents versus 26 cents? We're only losing 5% probability to make an extra 90% more. What do you guys think about that? Does that make sense, guys? I just changed it. We're selling the 35s. buy the 37. It's a $2 wide. It's a $2 wide for 55 cents. Or we could do the 35.5 by 36.5 and only collect 26 cents. I think it's a no-brainer, but it's up to you. I think it's a no-brainer, guys, but it's up to you. You realize what I'm doing here? This here makes 35.55 your break even. Okay? That's about a 66% probability. This here makes 35.70, basically 35.76 as your break even. And that is 35. That's about a 70% probability. So we're losing 4% probability, but we're almost doubling our chances, or doubling our what we're receiving. What do you guys think? You understand how I came to them numbers, guys? You understand how I came to them numbers? Okay, cool. I think we got a unanimous vote here. We're going to sell the 35s and buy the 37s, but I'm not going to try for, I'm going to go, what's this thing doing right now? And it's down about, D'Angelinas, I agree. We got unanimous vote here, guys, to do the 35, 37. If you guys want to change it, you can always change it. I'm going to look to collect 54 cents. It doesn't matter. Let's just do the 50. I'm going to do the 54, and I'm going to lock it in. Do the 54, and I'm locking it in. Okay? 54 cents, guys, is what I'm going to look for. Does anybody object or anybody have anything to say about this? Not at all, huh? Good. All right, good. No, as long as you understand, we will. Yep, exactly, bud. All right. With that being said, guys, nobody has any questions about it. We will get this sucker documented. Let me write down what we're doing here, though. What are we doing here? We're going to trade USO. I'm excited, guys. Some of you have never traded oil or anything big like this. We're going to do a bear call spread, which is a credit spread. We're going to sell the 35s calls, and we're going to buy 37 calls, and we're going to collect 54 cents. And like always, this is a day order. Expiration October. Any questions about this, guys? Any questions? We will have tonight's video posted right there. Can we look at the index play? Yes, we can. We absolutely can. Let me go back to the charts here. What were you looking to do? We were talking about retail. We were talking about retail. Is that what you want me to look at? No problem, Tim. No, you can always ask. We got time. We'll go all night if we have to, but let's go back to the XRT. If you guys decided to be bearish on this, if you'd like to take the position, let me show you and explain. We have resistance up here basically at the 90s, at the 89.74. So basically the 90s. Let's go over to the trade tab. Let's type in XRT. This is the retail sector. We're going out to October. And remember we said 90 was resistance. So we look at the 90s here. To stay below the 90s, we're looking at about a 60% probability. Let's go ahead and let's go out to the 91s. And they're about a 70%. So let's right click, sell vertical. So we're going to sell the 91s, buy the 92s, collect 28 cents. Now remember we did say that the 90s, anything below the 90s is good. So let's go to the 90s and let's see how much we can collect. This is going to change our percentage. Remember, this is going to change our percentage. If we did the dollar wide here, this is phenomenal. But looky here. If we did the dollar wide, we sold the 90s. Shit, that's not right. If we sold the 90s and bought the 91s, we can collect 38 cents. And that would be 90.38 would be break even. That would give us something in the mid here, around a 66% probability. But if we decided to take on more risk and be sure that we manage the trade, take on a $2 wide spread, we can do the 92s, 90.92, and collect 66 cents. That makes 90.66 our break even, which puts us closer to this number here. So now we're talking about a 60, let's say 68% probability. So we only gained 2%, took on more risk, but we almost doubled our intake. Not quite, probably 70% more. So we're collecting 66 cents if you're willing to take on a little more risk. But mind you, we are counter trend. Not always the best thing to do is take on more risk when you're counter trend. Remember, if you have a $2 wide, you minus your 66 cents, that's $1.44, right? If my math is correct. Over here, you got a dollar wide minus 38. Not quite so bad if it doesn't work out for you. Not quite so bad. 62 cents is what your risk. This is your risk. Not so bad if it doesn't work out. So sometimes, even though something looks so beautiful, you can bring in 66 cents on a $2 wide. You are against the trend here. So it may not be a bad idea for you just to take the smaller risk. If you think there's going to get a drop here in the indexes, you think there's going to be a drop here, it may not be a bad idea to take on the smaller risk on this position. But that's just something I would like to say, but that is going to be completely your call. Any other questions about that, Tim? I want to hit on everything that you may have here. Anybody else have any questions on the retail sector? I would like to hit on all topics if I can. Tim, you think you're going to take it? The markets roll over. I mean, it's not a bad opportunity. It's an aggressive play, which is why you're getting more premium. You're getting more premium here because it's a little more aggressive. Doesn't mean it's not a good play, though. Okay? So if we get a nice drop here, we get down below this previous swing low here from last Thursday, down below these 88s, I might even go short here, guys. We get down below these 88s, I may even go short as long as we have an increase in volume. If we do not have an increase in volume, you will not see me. As I will put on all my plans and all my strategies, I want to see a volume spike. That is key for whenever you're trading these options. Volume spikes are very, very important for trading options. That gets the market going. We don't need to see this thing run forever. We just need to see the wheels get in motion. See all these volume spikes I'm going over? They are changing the market. Look at these volume spikes, guys. Look at these volume spikes. Right here, pop to the upside. Right here was on this big down day, drop. The next one, down day, drop. This one here, oh, pop to the upside, go with it. Volume spikes are tremendously important when you're trading equities and you're trading these option plays, these swing plays. If it drops tomorrow, I absolutely will not get 66 cents, Tim. No. But I'm willing to give up some of that profit or potential in order to get my odds in my favor and a peace of mind. And I would not just take it if it dropped below 88. It has to have a volume spike to the downside. How would you go? The same way we just did it on USO. Call spread. Sell a call spread. The same numbers we just went over. You're either going to, well, what I would be looking at is to sell the 90s, buy the 91s, or sell the 90s, buy the 92s. You're going to collect 38 cents here and 66 cents here, depending on what you choose. Credit. Okay. Those are the two positions I would look for if we were to be shorting this. We decided as a group to go ahead and take the USO, so that's what we did tonight. Let's go back to that before we finish up here. We decided we got a volume spike here on USO to the downside. We got a volume spike here to the downside. That led to some really great trading. So let's look to see if we can get some more follow through here on the USO. We just need we get another point or two, drop to the downside, we're golden. Another point, we're good here. So we would be good here. Any questions here, guys, though? Any questions at all? We went ahead and we did the 35 half. No, we did the 35 by 37, and we collected 54 cents. We sold the 35 call. We bought the 37 call, and we're going to collect 54 cents. That's our trade for tonight. Any questions, guys? You're welcome, man. You're welcome. Keep up the good work. Any more questions here? Thank you. Me too. Getting some people liking it. Okay. Tim likes the USO. Good deal. Well, good, because we're shorting it. Good, because we're shorting it. I hope you like it. We have some pretty major support down here around these 32 halves, 33. We just came off a resistance. Most recent swing low is going to be down here around these 33s. So if we get down in here, anywhere close down in here, we're going to be golden. We have plenty of room to move here. Plenty of room for us to take profits if it starts to drop, and that's what we will do. So, all right, are there any more questions here, guys, before we wrap up tonight? We are in 3 positions. Now we're getting ready to be in 4 positions, and all of them are looking tremendous. So no complaints. We're just going to keep on trucking, and I will be sending out alerts if anything were to be changed here, especially if we get a 2-day pop in Cisco, or we get a little drop in XOP, or drop in the market and a pop in the volatility. Either way, you guys will be alerted. I will send out the alerts and let you know what I'm doing. But and also, hopefully we get filled tomorrow on USO. I will put that in tomorrow's email, whether we got filled or not, and we'll go from there. Any more questions here tonight, guys? Any questions at all? If not, thank you guys. Good night, man. Yep. Good night to you guys too. Yep, you guys too. Thank you for being here. I really appreciate it. Thanks for the feedback. Hopefully, you guys are right. If we lose on this position, I'm only have you to blame. But but anywho, uh, all right. You guys are welcome. You guys have a good night. I will see some of you in the morning in the live trading room. I'll see the rest of you in the emails and next week's class. So you guys have a good rest of your week. Have a good night. I'll see you in the morning or next week. Bye bye for now, though.